Hello and welcome to another edition of Capital Market Live on Channels Television. I am Will Ibong. As always, we take a look at how your investment performed this week. How was the market, bullish or bearish? But first, let's check in on markets outside Nigeria. European stocks markets declined on Friday as investors assess the key U.S. jobs report showing weaker than expected labor markets. The regional stock 600 index closed down 0.2%, giving up gains from earlier in the day. Now, Germany's DAX was down just 0.73%, while the FTSE 100 closed lower 0.09%, and France's CAC 40 also down 0.31%. Let's look at Asia markets now. They traded high on Friday after U.S. President Donald Trump signed an executive order on Thursday formalizing a lower Japanese auto import tariff of 15%, down from 27.5%. Now, the order also confirmed the agreement for $550 billion of Japanese investment in U.S. projects. Now, Japan's Nikkei 225 jumped 1.03% to close at 43,018 points. Hong Kong's Hang Seng Index climbed 1.43%, while the mainland Shanghai Index rose 1.24%. Now, let's look at U.S. markets, if they performed any better after that weaker than job reports that they got. U.S. stocks, gave way. There were worries about the slowing U.S. economy. Expectations of Federal Reserve rate cuts were also solidified after that weak report. We saw S&P 500 finish the day down 0.32%, while the NASDAQ composite declined 0.03% to settle at 21,700 points. Now, the Dow Jones Industrial Average also closed down 0.48% at 45,400 points. Now, on Friday, the Bureau of Labor Statistics reported that the economy added just 22,000 jobs in August. That's below the 75,000 that economists had expected. The unemployment rate also rose to 4.3%, in line with expectations. The report supported expectations for at least a 0.25% cut by the Fed at its meeting later this month. Now, back home in Nigeria, the NASD over-the-counter market closed the week lower as the index fell 1.5% to 3,565 points, with market capitalization at 2.13 trillion naira. Trading activity was weak. We saw volume drop 87% to 9.41 million units, while value fell 53% to 69.07 million naira across just 90 deals. NIPCO PLC led the gainers with a 10% rise, followed by Impressids, Bacolori, and the First Trust Mortgage Bank. On the flip side, Joe Fluids, UBN Property, and Lagos Building Investment Company all closed lower. Now, top traded equities for the week were CSCS, a Central Securities Clearing System, Friesland Campina Wamco, Nigeria, and Industrial and General Insurance. Let's move on to the NGX, the equities markets, where the big guys are. We see the markets also closing bearish for the week as the all-share index fell 0.94% to 138,980 points, with market cap at 87.94 trillion naira. Trading was mixed. Volume dropped to 3.12 billion shares across 118,000 deals, but the value of trades rose to 90.29 billion naira, reflecting interest in high-value stocks. Now, sector performance, it was broadly negative. We saw industrial goods leading that decline with a 2.08% decline, followed by banking, consumer goods, oil and gas, and insurance. Now, the top gainers were Sovereign Trust Insurance. That was up 14.23%. Not bad for the insurance sector. Secure Electronic Technology was also up 12.94% for the week, and Cornerstone Insurance was also up 12.36%. Now, top losers, we saw that including DAR Communications, that was down about 21.1%. UPDC PLC also losing about 13.85%, and ICO Insurance down 13.61%. Profit taking in that stock, ICO, has been up for a couple of weeks now, so it's indeed time for investors to take profit. Now, most traded stocks for the weeks were Sovereign Trust Insurance, Access Holdings, and Fidelity Bank. Now, good news in the market, we saw the Central Securities System, Clearing System, and the SEC also coming together. So we had that commission expressing, the SEC expressing optimism about Nigeria's transition from T+3 to a T+2 settlement cycle in the capital market. Big one for Nigeria. In a conversation on Business Morning earlier this week, he explained that Mr. Gamadas, Emomotimi Gamadas, the SEC DG, explained that while trades were currently settling 3 days after execution, The shift to a 2-day cycle will align Nigeria with global best practices, boost market efficiency, and enhance investor confidence. Let's take a listen.
For so long, we have been on the T3 mode of settlement, which means it takes you 3 days to get your money after you have invested. And we think that we have come of age to reducing that. And we are doing it, scalely. Because what are we saying? We're saying, okay, let's start first with a T+2, which is a T+2 settlement days, which will happen actually on the 28th of November 2025, and we are not going back around it. But just to also let you know, we are moving from T+2 after 6 months in 2026, because we think that people should get their money, as fast as they get their money after doing an investment. And of course, all of the payment systems in Nigeria is about one of the most advanced payment systems in the world. Kudos to the Central Bank of Nigeria. And why would that not happen even in the capital market? So we are saying that capital market, the investors in the capital market, Nigerians should enjoy the benefit of the digitalization of the entire system. And that's exactly where we are coming from, because time is money. And we are excited that that is going to happen, start happening on the 28th of November, and we'll move forward even to a T+1 and possibly a T+0 as we continue to drive innovation and transformation of the Nigerian economy under the present government of President Bola Ahmed Tinubu.
That was Dr. Imomotimi Agama, that's the DG, Director General of the Securities and Exchange Commission in Nigeria, speaking on the T+2 cycle in the capital market. We have to discuss this and more. Mr. Ambrose Omodion is the Chief Research Officer, Investator Consulting. Good to have you join us this evening, Mr. Ambrose.
Thanks for having me.
Mr. Ambrose, you heard Dr. Imomotimi Agama there talking about the T+2 cycle. We've been, using the T+3 for quite some time now, many years now. How do you see this T+2, according to what he says, time is money, how do you see this improving liquidity in the markets?
No, I would say that 2025 really a year of reform in Nigeria. We're seeing on the government aspect, we're seeing on the regulators, means that we want to achieve our $1 trillion economy in the nearest future, which is good. Actually, from the world economy or markets, Agama and his team just like align our market to international best practice. For me, it's a welcome development, because this is going to also improve liquidity and at the same time help investors to manage risk. Because starting from the T+3, which is that means after transaction you have 3 days for your money to settle. That means if you transact on Monday, the settlement will be what on Thursday. Mm-hmm. Then Nigeria will now move from T+3 to T+2. And I'll tell you that in UK market, that T+3 is to what exists today. In US, they have moved from T+2 to T+1. I'm good that Nigeria is aligning this with best practice international market to make our market more efficient to attract more inflow from foreign investors, and we Nigerians also to be able to do our short-term trading effectively. And for me, it's a good development. And for others in the market, this time to open your mind, accept the reform, because the T stands for what? Transaction. The settlement stands for what? The days your money will be in your account, whether you are buying or you are selling. That means you will factor this into your trading plan. That will improve your also your own management of your risk, at the same time liquidity in the market. For me, it's a welcome development, very welcome development in the market.
You mentioned the foreign inflows now, foreign investors coming as a result of this, but do you see this really boosting investor confidence? That's the foreign investors we're speaking here.
I will tell you that, yes, it will boost their confidence, because in the way they are coming, I said T+3 in US, in UK is T+2. If Nigeria can adopt T+2, that means they are coming here to make money, and usually they turn around, whether they are doing short term or long term. For me, both in the stock market and other transactions in the investment world in Nigeria, is a good, a good idea for the SEC and its team, and also other like NGX. For me, it's a good one, both for foreign investors, like I said earlier, and the local investor.
Okay.
Because one, I tell you that now your turnaround in your investment is shorter. That means if you are selling, can you calculate what you're going to do with that? Even though you want to withdraw the money from the market, you want to buy that stock, these funds are available. And also, the T+3, if you are, before you settle, you have a longer risk management or risk period. But now if you go from 3 to 2, your risk have also reduced, because they want the asset that you are changing and the money to come for them to confirm the source before they close the deal. That means instead of waiting for 3 days to close the deal, for 2 days, better for us. And if we can move from here again toward T+1, That's a tumble for Nigeria, regulators.
Okay, I know what I'm saying here. Change is something that is not easily embraced or, people adapt to very quickly. So I just want to ask the question. Our Nigerian market operators, our brokers, our banks, custodians, are they ready for this transition to T+2 and possibly T+1 in this?
I would say that the SEC took the right step at the right time. The banks have become bigger, sitting on a good money now to meet the T+2. If I to say before, our banks are, but now we have solid banks in Nigeria that even the T+1 we can do it because the banks are robust. For me, even others like the PFAs will align immediately because it's going to enhance their own transaction time and also period. For me, no sector or no part of the market will be thinking, what is the coming? It's a welcome. Everybody is hand open to welcome this because it's going to boost efficiency and also help us to manage risk in the market.
Okay, so how does it really manage the risks? How does it manage counterparty risks in the market?
Okay, like I said earlier, before now, if you are selling or you are buying, before you settle, it takes 3 days. Why that 3 days? Ask yourself. The 3 days there is for trying to know that access is free. You know the access is sure is coming. And the source of fund to consider that is also there before they now match the deal. But that is taking 3 days. But now, okay, if 2 days time, if you that are waiting on that, it becomes easier and shorter for you to do that. For me, there is no cost for them. The essence of the T is for us to make sure that all the access and the fund come to cross-check and see before it will know the deal will be done. That's why in some stock frame you can buy and sell, but you can't withdraw money until T+3. But that's why now it becomes faster for the other side to settle and the other side to settle, and that is a good deal for any market.
Okay, so how competitive would this make Nigeria globally?
Yes, it makes our market.
How could you break it down in clear terms for people to understand what level would it place Nigeria if we should move to T+1 in the near future?
The advanced markets that are coming here, the foreign investors, they've once practice T+3. They know what it takes them to do T+3. Coming to Africa or looking at the world of Nigeria, we're still adopting T+3. Why already they are in T+1 in US and T+2 in UK market, in London market. But seeing T+2 in Nigeria, it easily aligns that, yes, my timing I'm having in UK market, in US market, I can do that timing here in Nigeria. That means if I'm transacting, I'm getting value for what I'm doing. That also make me to bring more money. Because I know that, in the next 2 to 3 days, I can move to the next deal. That is how it works. It's like you to open the door for us because that T+3 will slow down some transaction. But now that T+2, which I said earlier, if we implement this for the next 2 or 3 years or 5 years, we might move to T+1 by government. That will be better for us because in US in 2017, we were still operating T+3. Before 2017, they moved to T+2. In 2024, they moved to T+1. Can see the way they move. That is how market should move. Efficiency, improvement, and technology had made things easier for the global economy, which also were part of the technology. We should benefit from it.
So, looking at it, the benefits you've mentioned, we mentioned the risks that we
mentioned liquidity
that will come into the
market.
Yes,
to manage our risk.
Okay.
And then I've opened up for money flow from foreign investors and local investors.
Okay, so the risk now we're talking about, is there any risk that when foreign investors come in and they can easily take their money out? Is there a risk? I just want to understand.
The risk is that, for example, I told you earlier, if you have to wait 2 days, 3 days, and you're not waiting for 2 days, you can always turn around your business faster for you. And that's the sense of the T transaction for settlement. No economy or no market that say, as you are doing today, you get your start. That's why in US now, if you deal on Monday, on Tuesday, you get value for what you have done. Is it not 2 days T+1? You can see the shorter. Then before they are doing T+3, they move from T+3 to T+2. The technology has helped also to move from T to T+1. Here in Nigeria, we are moving from T+3 to T+2, which I said earlier that in London market, they are already in T+2. Now that we are moving to T+2, they rate our market, apart from other transactions, we are almost the same platform. We are doing T+2. Nothing is so special with the US at our market because it's the same equity we are trading. But if now we are almost the same platform of settling our transaction, within 2 days, we are already from the same platform with UK, apart from you that is doing T+1. For me, it makes our market more attractive, open for international investors to come in, and we need liquidity in the market. No market exists in isolation. Only that we don't open our door for foreign investors to come and take over our market because it will affect our planning. Our markets are rallied for straight 6 years because of Nigerian investors taking charge of our market when they pack out. Now they're coming back. I think also the regulators should also think for that you don't expose your market to foreign because any small policy change or any come of a risk, they will sell off on us and bring the market down. Those that are planning with the market will be affected. Let's allow us to have a market like 50%, 60% before this time. There was time that they have almost 8% of our market, foreign investors. But now they're still below 20% of my good one. And I should let them come. We need them to make money in the economy.
Of course.
But our regulators should not open the door wide. That is free entry and free exit. You know how to take that. Fund that's coming should be, and so that the market will be stable. We can plan with the market because you want to encourage Nigeria to come to a market and invest. Because since they got their finger bought in 2008, most of them are still nursing their wound. It's only few of them have put their their losses behind and come and learn new strategy and open their eyes to learn, become intelligent investor. Or others, if they see that the market become more attractive, they'll come back. But don't allow this up and down, to also scare people away. Let's have this stability. Despite that the market has its own risk. But when the market is stable, you can plan to take your calculated risk at the right time.
We'll speak of calculated risks much more. Well, let's take a quick break. When we come back, capital market continues. Don't go away. Welcome back. If you just joined us, you're watching Capital Market live on Channels Television, and I'm Will Ibang. And we've been discussing the performance of the equities markets, especially the T+2 transaction cycle that the SEC and the CSCS have come together to ensure that by November, Nigeria's capital markets will be operating on that level. But let's look at the market in general, how it performed this week. And we still have Mr. Ambrose Bordion, Chief Research Officer, Invest Data Consulting, still with us in the studio. Mr. Ambrose, what can I say about the markets? After that strong rally we saw in the month of July, rallying for several weeks, right now everybody's wondering what's happening in the markets. Let me just ask now, did we rally too soon, too quickly, and too fast, and that we're getting our fingers burnt now? Because right now, or is there something underlying structural issues that are at play here, or is it just the September back to school that is we're seeing?
I will agree with you that we got Africa burnt. Let me start from there.
Maybe it became too hot, and then we needed to cool down.
No. Anywhere in the world, the beauty of stock market is that stock market will not remain up or remain down. The oscillation or the trendy move in the market is what creates wealth for designing investors and smart traders. We have seen the market rally for 12 straight weeks. You don't take that for straight weeks. Apart from the rally we have seen before, the 12 straight weeks, how many months is that? The same market corrected for just 4 weeks. People are panicking. For me, it's too early.
Well, 4 weeks of straight declines is something for someone to raise an eyebrow.
No. I was it's still a pullback. Until we have like 20% down, not even a bear market. Since we are still, something in the region of just about 30%, the top was still to this. But for me, it's a good one for the market. But the good thing is that market is now presenting opportunity for designing investors or smart traders to buy into the market. Why? I said earlier, the month of August and September are two different months that will give two different characteristics in the terms of Nigeria market. Because you have to look at what operates in your own market. Those in the US know what happened within all this month. But in Nigeria, I've seen data that show that these 2 months have oscillation movement, and it has been so. We saw that in August, market rallies were almost 46. That's a multiple back to close marginal around 0.3. Now in September, we have seen for the 4 trading week, the last one has the market was down. For me, the month of September, this is the nature of the month. No need of us to panic about it. But the good news is that as the month of September is starting on this direction, we know that August is where most of the banks are paying trade dividend, release their result. But for this year, August has come and gone. No single of those independent have released the result. That's a signal. Now, 2 of them have notified the market that between now and end of September, our result will hit the market. That is 2 of them. That means expect that those that are not notified for any time, between now and the 3rd week of September, we expect to see the results. And if results come, CBN approve trade dividend for the banks. It will change the narrative for your people that people are afraid. If today the narrative, they'll see that these banks are solid, they're paying trade dividend. That will not give an insight what will happen at the end of their financial year. That is for the banking sector. For the insurance, we have said that acquisition between now and August 2026, and the time for them to push in their new audited result will be around February and March next year. And they have released their 2024 audited account, which the lifespan of that result will expire this September, 9 months after your financial year end. That means if really they want to represent, you can't come to the market with unaudited account. And also, if that means that most of these insurance companies need to either approach SEC or approach their PENCOM, the regulator, to do both. One thing I've see that the PENCOM have done, the insurance regulator have done, they've approached other regulators to kind of waive some things for this insurance because they know that the time is short. That means the insurance company try to say, okay, because we are using our second quarter, first quarter before now third quarter will be coming by October. Okay, they operate the regulators say, let's audit our third quarter, our 9 months account to approach the market for our private market activity. Because I tell you, either they come to the acquisition will be the merger, public offer, or right issue will come, but you need something to present to the public. The first one that this is what we have for this, and this is what we want to do. You don't just come on claim yourself unclean to call number. You need to like a married party. When the lady is coming, I need to paint very well and come on. If you want to go to the market, give us your number. Let's see how ready you are. The number will give us insight what to expect from you. For me, they will allow them to audit the account. Then coming to the market, we now know what they want to do. Because if they wait till next year, it's going to affect the timing, unless they want to extend the August. And that's for and that means insurance also, we have seen that the act has opened a lot of doors for them to make money. If that is so, if the government that made the law or the regulator will first of all ensure all the buildings that government has at the state level and the federal level, these insurance are made. They have a lot of money to play around, to invest in the market, they invest in other things that also boost the economy. For me, it's a economic development for Nigeria so that we're kind of opening the door open for insurance to do their main business. Before, in our mature economy, we know that it's the insurance that owns the banks. In Nigeria, we're seeing the insurance coming up now to start owning banks and start owning more investment. For me, it's a economic development for that. And also look at also that this is the end of the third quarter of the year. By October, we'll be seeing the third quarter accounts, which is the most important account anywhere in the world because it gives you an insight what a company has done for 9 months, or left to the 4 months. Then you have seen their third quarter performance the previous year and the full year in 2024. Already in our market today, as a second quarter, about many companies have beat their 2024 performance. Then 2025 third quarter open this company have paid 5 naira last year. On the strength of their third quarter, we're expecting October, they can pay 8 naira. That will change the cycle in the market. Start positioning for end of the year. Don't forget also, the last quarter of the year is the most active quarter anywhere in the world because people that are sleeping from January till March, once we enter October, all of them wake up. They want to be on the streets, want to make money. That will increase a lot of activity for the last quarter of the year. That means both banks, both manufacturing company, consumer goods, because that's the time people consume more. Christmas is coming, want to store my house, want to do everything. That will improve. That means this last quarter, we expect the market to change the what we are seeing now. For me, design investors should go for value stocks, defensive stock, and position that price are here against the future. Because no investment is against the past, always against what? The future. What has happened now will give you another way to put your money for the future. That's for me. No need of panicking. Pull back and opportunity. I'm happy to see this kind of market we're seeing now.
Of course, so that you can position yourself.
Exactly.
Okay, so but looking at the sectors now, we see that most sectors really reported losses for the week, and they've been reporting losses for quite some time now. How quickly do you see them recovering from these losses? Especially, you said the last quarter is always the most important quarter of the year. How quickly are the sectors, banking, insurance, oil and gas, industrial goods, consumer goods, how quickly are they going to turn around and, start reporting positive closes? I do know that the market is a zero-sum game.
No,
it doesn't matter if it is negative or positive. Some people are making money. But how quickly do we see the positive, the greens now?
Actually, if you look at what happened the last day of this period, that's on Thursday before the holiday. If you look at the band that day, it's across the major sectors, widening one, but only comment there is that it is more of retail activities. We saw a high volume, about almost 1.13 billion shares traded, which is a good one. The money flow in the market looked up from about almost 12 to almost 28. If you look at the sentiment report from Investdata, we've seen that we'll have 40% buy for the week and 60% sell for the week. You can see that it has closed period when we're having 80% sell, 90% sell, 10%, even 100% sell. But now we have seen 6% buy, 40% buy, and 60%. That means investors are coming back to the market. And you can also look at last week or on Friday, most of the insurance stocks that were down, all kind of rebounded. Then we saw some banks also breathing out. For me, the market is just saying that there is a sign that recovery is underway. But not saying that Thursday have concluded that recovery is on the way. We might see another oscillation next week, but I believe that from the third week of the month, where we have seen inflation figure and also the outcome of MPC meeting will further shape the market. If one thing I tell you that in this next MPC meeting or policy meeting, to navigate it, you don't need to fear. There is something that there's no possibility of hike in the meeting. That is clear for us that you can't hike at this time because the economy needs cheaper fund to drive everything. That means either there will be another hold or cut. Any of them will also support the capital market. For me, there's no cause for alarm. Let's wait and see, because as far we're seeing a better third quarter in October that shows where the company is going, where the market is going, and also that third quarter will review the economy. because all the sector of the economy is already reflected on the exchange. You have the 12 sector of the exchange. For me, once you see the figure that come from the exchange, it tells you how the GDP will look like. If we see a better number from exchange for third quarter, it tells us how the third quarter GDP will be. Already we know that the Q2 GDP will be better. The data is not out yet, but I know that after the rebase, we've seen the first one of 3.13. The second one will also come and also be positive. Yes, we're moving slowly, but I tell you, if we're able to square this year, and also the government able to put lower fund, cheaper fund with their policy from CBN, then by 2026, we'll see an economy that will also run. And all the implementation of their tasks, see how they can navigate it. I see a better economy if these policies are sustained. Because not just to move, to sustain the movement is what we want. Making a good policy is not just by month or starting to move. How to sustain the move and let it make it part of the economy is what matters.
I know that is already, we've run out of time, but there's something that just came up in the market that lead way, buying, power or something like that. But maybe we'll just have that conversation some other time. It's something interesting happening in the market though, but we just kind of run out of time. I just wanted to bring that in.
No.
Mr. Ambrose Omodian, thank you so much. Chief Research Officer, Invest Data Consulting. Many thanks for your insights on the program and joining us this evening.
Yeah, thanks for having me.
And that wraps it up for this edition of Capital Markets. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch this again on our YouTube channel. I am Will Ibong. Thanks for watching, and I'll see you next week.